Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for April 21st, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a daily chart of the ES. The previous session was quite a trend day up. It was incredible strength. Once price pushed above the 40-41s, it was a steady continuation higher once it was able to really get through that zone, 42s, 43s, and then boom, this thing led to a much bigger rally throughout the rest of the session, heading into about 23.58s. Again, we continue to chop around 53.54. We continue to chop at the center of this range. Very, very difficult from a swing perspective to do anything. I've been mentioning this. That's why it looks like it's going down, then up, then down, then up. It's because it's just chopping. At some point, we're going to see expansion, but right now in the middle chop, it can be very, very difficult. Overall, the direction is still up. Any weakness still to be bought until proven otherwise, especially until 2300 gives up. So right now, still bullish, still trending up, but very difficult to do anything swing-wise in the middle of this range. Here's an intraday time frame. On an intraday basis, we had a big rally the previous session. Here it is. And so anytime you have a markup phase like that, you tend to see some sort of trading range develop. Here's the high, here's the low of that move, and then there's the trading range. So we could be looking to fade edges right now. Any push down in toward 48s, 49s could be an opportunity to buy back toward 58s, 59s. And it could be a fade the edges type of approach, at least short term. All right, let's take a look at crude oil. Crude chopping in a very tightly coiled range right now in the lower time frame. In the higher time frame, we see that price is holding after the sell-off. Big sell-off on this day. Remember, we had tightly coiled price action here. We knew expansion would be coming at some point, and instead it broke to the downside and dropped significantly. Now we're sitting up here, down here with a very tightly coiled price action at the moment. Overall, I've mentioned that 50 is still the big time pivot. We could still drop into 50 and still remain bullish back toward 53.40. So 50 is going to be and continue to remain the major pivot to watch. If bulls can continue to keep 50 bid, there could be a trading range that develops or some sort of action between 50 and 53s. On an intraday basis, right now we have a very narrow range that's forming after the sell-off. Very typical. This is what I mentioned the previous session. In the previous session, I mentioned that we had a significant sell-off. Typically speaking, you see a range develop. And yesterday, the range developed from 50.5 up to about 51.40. And that's still the range. You can see lower highs coming into it here. Above 50.90 starts to spark this thing back toward 51.40. But really, it's outside of this range where you see the expansion. We have tightly coiled price action that could lead to some significant expansion down the road. Right now, fade the edges until proven otherwise. Let's take a look here at gold futures. Here's a look at gold. The lower time frame coiling up a bit. We talked about the absorption signature that was developing in the previous session. And I mentioned it could be a 2-day, 3-day pattern. And this is what's happening right now. We had the major spike below 1280s here. We had an absorption signature that built out between 78 and 79. That's been an area where bulls are defending. The expectation is the bulls are trying to keep that area bid for a shot at new highs into 1300 to 1306. Any failure to hold 78s will drop this thing right back to 63s, perhaps as low as 1250s. We've had a very bullish uptrend, so the expectation is any pullback is still a buying opportunity right now until the structure breaks. But on an intraday pattern here, 1278s have been fantastic. That's been the area to defend. We mentioned that the day before. I said, look at this spike low right here. Now bulls are defending 78, 79, and look how many rotations we've seen into that zone that have been great buying opportunities to the tune of 5, 6 handles or more. And now we've gotten a push through the top of that range here, 85s, but not really seeing acceptance at the moment. So continue to defend 78, 79 if you're a bull. As soon as that area gives up, it could be a major stop run to the downside. But right now, given the pattern of behavior, the expectation would be an attempt to continue higher. All right, lastly, let's take a look at the NQ. Here's the NQ, higher time frame NQ right here. Basically, the higher time frame MQ shows that price has pushed higher significantly, and recently we've been trading in a range. Back and forth action in the range, but we're never too far away from an all-time high at the moment. We have not rolled over into major support just yet. We haven't taken out lows. We just continue to trend up. So the market remains quite healthy still. And now we're trading just above 5440s, which is very important. I mentioned 5440 was an area where bears have defended for a return back down. And right now we're holding just above that area. Any failure to hold 5440 throughout the day could be an indication lower. So right now we're still range bound. We're near the upper end of the range. Not a great area to do business on a swing basis at the moment. We've seen a major trend day up the previous session, and after the trend day up, we're now seeing trading range activity. So again, very similar to the ES, any drop here into previous session's VWAP or that LVN could be an opportunity to buy it back up. 32's key level here, so any drop even as low as that could be an opportunity to buy it. Failure to hold that level will start to push things back down. All right, that's it for now. Let's see how this thing plays out heading into the rest of the weekend. Good luck, trade well, and happy Friday.